I'd like to turn your attention back to China and the health of its financial sector in particular. And I guess I'm basing my question on reading the transcripts from 2014 that came out earlier this month. Just in March of that year, there was concern about the Chinese economy, and one of your colleagues on the FOMC at that time asked the staff about how the Chinese economy would hit the U.S. economy. And the staffer said that there was what they were worried about was that not only was the Chinese economy slowing down, but there was the financial sector. And the quote was, "There's a tremendous amount of dodgy loans in China." Now, I was wondering if you could give us an update on these problems in the Chinese financial sector and how do you think it might impact the economy, particularly now that they've been hit by this unexpected shock?
Well, China has had a problem for some years, including from that period, 2014 up until, I guess, 17 or 18, which was essentially just a lot of debt for an emerging market. For an economy at the stage of evolution of the Chinese economy, they had very high levels of debt, not sovereign debt the way we think of it, but more business debt of and state-owned enterprises and also just private businesses. And a couple of years ago, the authorities decided to try to get that under control, to stop the growth and to control it. And that, as I mentioned, that's one of the reasons why Chinese growth slowed, and it's one of the reasons why global growth slowed, because we felt that. And they've actually stuck to that even during this difficult period when they were experiencing, strains from trade negotiations and that kind of thing. The authorities have stuck to that and have, again, continued to try to do that. So to try to control the growth of debt, and that's important that they do that. We don't think that that there's any imminent risk there, although, as you point out, the coronavirus thing is a significant thing, which will have some effects on the Chinese economy, at least in the short term. The Chinese economy is very important in the global economy now, and when China's economy slows down, we do feel that. Not as much as countries, though, that are near China or that trade more actively with China, like some of the Western European countries. We still have, 85% of our economy is domestic. We have a much smaller external sector, trade sector than other economies, just because of our physical location.
Okay, Brian.
Hi, Brian Chung here, Yahoo Finance. So the combination of T-bill purchases and repo operations have been described colloquially as liquidity. I'm just wondering if you semantically agree with that description. Then secondly, what the impact of that has been on risk assets. I don't know if that's something that the board or reserve banks are formally looking into or just looking at what the effect of it has been. How are you kind of thinking about that going forward? Thanks.
Well, so two questions. I mean, in terms of liquidity, I think what we're doing is what I said. We're trying to raise the level of reserves back up to a level so that banks can meet their reserve requirements and that there's enough reserves in the system that we don't see reserve scarcity and we don't have to use repo operations to provide additional reserves. So I think, as I mentioned, we believe we can get to that state at the current pace sometime in the second quarter. In terms of effects on risk assets, as I said earlier, it's very hard to say what is affecting financial markets with any precision or confidence at a given time. It's not our intention to change the stance of monetary policy. These were designed to provide more reserves and really to do that in order to enable better transmission of our rate decisions into the economy under our chosen framework. That's really the purpose of what we're doing.